Hey everyone, Michael here. Today I'm going to show you my two favorite stock screeners on Finviz. They work in both bearish and bullish markets, and they're both for stock traders and options traders. Now, the first one's going to be higher risk, very high reward, and the second one's going to be medium risk, more medium reward. Now, the first thing you're going to do is click on Signal. You're going to go to Unusual Volume. Second, we're going to click on All, go to Market Cap. You have a couple options here. I like to go from 300 million to 2 billion small. If you feel like you don't have enough options to look at by the end of this, you can always change this to just small, under 2 billion. For now, let's look at small, 300 million to 2 billion. Next, we're going to go to Performance, Today Up. We want to ride the momentum here. After that, we want to go to Industry. Industry, Stocks Only, X Funds. Below that, Options Shortable. If you guys don't care about being, trading options, you can leave this at any. If you guys want to trade options on these stocks, which can be very, parabolic, you can go to optionable and shortable. After that, you want to have an average volume over 100,000 shares. Now, you can go to 500,000 or 100. I think 500 takes a little bit too often. You really don't find too many good opportunities. So for this one, I change it to 100K. And just like that, that's all it is. Once you find this, you're going to have a list of under 20 usually. Right now we have 13. You're going to click on this button right here called Charts. And remember, these are the very high risk ones, but very high reward, which is why it's so fun to trade options on these, because a lot of times these are pretty cheap, which means the options are going to be very, very cheap. So instead of paying like $100 or $200 for one call, you're only going to be paying maybe $5 to $10 for a call. So if that goes parabolic, you're making a lot of money and allows you to actually buy a whole bunch without putting up a whole bunch of capital to start off with. Now, what you're looking for is something that hasn't popped yet. You don't want to chase. Chasing is something you never want to do on these, these types of plays. It usually ends up, as soon as you buy it, it falls like a rock. That's where that type of meme comes from, buying stuff a little too late. HZON looks pretty good. Let's see. Average volume is about 200 shares. Today it had 3.2 million shares traded. Something big is happening here, and it only popped about 1%. This is something that I would look at. Nice long consolidation. You don't want to see something going all crazy all over the place. Consolidation, ready to pop. I'd put this one on the watch list. Next, let's see. Plab, this one already popped. We don't want to follow this one. We don't want to chase it. FLL popped. We don't want to chase it. This one, AVAV had some bad volatility. You do not want to trade that. You want to trade something that's been consolidating. Atmr is another good one right here. Long period of consolidation. Average volume is 154,000 shares, and today we had almost 700,000 shares traded. There is some volume coming in here. We're creeping up. This could be something you guys want to hold on to, and it's only about $9, or $10, excuse me. If you guys wanted to trade the options on this, you would aim for buying options out of the money around $10, holding them for maybe max, maybe a couple weeks to a month. That way, if something really big happens, you're able to sell it. The key thing here is if it does pop off, you're not going to be waiting more than a few days. Whatever it presents you, whatever that profit is, you got to take it. You're not going to hold on so long that the pop ends up dying off and becomes a massive dump afterwards. You have to take the profits as they arrive. All right, and you see the page number 2. Any more consolidation? Not really. Now, in order to save this, all you have to do is come over here to My Presets and hit Save Screen, and it's very easy to do. Now, for the second one here, this is going to be most important. This one is called Breakouts. I like this one a lot. I'm just going to click it right here. Let's go to All. The market cap is going to be mid plus, so over 2 billion. This means they're more stable, less risk, less reward, but definitely worth it, especially if you're trading options or if you're just trading stocks. Price over $50. This is my preference. You guys really just need to have it over $20. I do over 50 because otherwise I feel like I have too many stocks to look at, and my time is very precious. I want to get a move on. Average volume, instead of 100K, we're looking for 500K now. And the last one is you want it to be optionable and shortable. There is another one I have right now. It's just country USA. You don't have to have this one as well. This is because a lot of the Chinese stocks are having some turbulence in the market. I don't want to expose myself to that extra risk. If I want to have something more risky with a lot higher reward, the scanner I'm going to choose for that one. Again, we have 584 stocks to look at. I know that's quite a bit, but usually it's worth your time to look at these ones because it just makes life so much easier. And if you want to, you can go over here to the simple moving averages and say, hey, I want the price above the 20, and then it cuts it down to 326. And then again, you can say, hey, I want it above the 50 as well. I want a strong price movement over the last few days that could help out with the breakout. Price above the 50, and now we have 284, and just like that, things are looking a little bit easier for us. And what you're going to be doing is just skimming. This, after you learn how to do this, it takes like less than like 20 seconds per page. It's pretty darn fast, maybe even less than 10 seconds. You're skimming, looking for a breakout of the chart here. Some of these are looking okay. If you find something you like, you just open up another tab and you just put it in there. AFL, that could be something right there. AEP, something like that. AEE right there. There's quite a few plays and it's only in the first page, right? Looking again, AJG, ACAM, that's something right there. Keep on going, keep on going. And if you feel like there's a lot of good stuff in here, you can open up as many tabs as you want to. AMT, this is something we made a lot of money on a few weeks ago. ARE. So there's a lot of potential breakouts right now. AWK, we talked about this one a while ago as well. That's a nice breakout. And over time, you get a feeling of how these stocks play out. Berry right here, another one. So we have a huge list just, only on the third page. We have about 7 or 8 different stocks we can look at. From there, you kind of do some technical analysis. You see multiple tops here. We're looking to break out of a specific level, which seems to be around like $58 or so. So if we're able to break above that, you guys can buy some options on it. At the moment, you see this almost like a little bit of a double bottom. If it does break above this neck, that's already another sign to buy. So there's multiple signals here for AFLAC. Not to be bought at this moment in time, but to be put on your watch list. For all we know, this top may hold and it may come back down a little bit later. AEP, looking to break out right here. It looks like it just broke out, but you'd have to move this over to TradingView to do some better technicals because right now you see this purple line is actually going through it. So we're not entirely sure if this is an accurate trend line to be broken out of. Now, again, if you want to save this one, you're just going to go to save screen. It'll make your life a lot easier. And the key thing here is, especially these types of stocks that have a lot of volume and whatnot, you're more easily to find hedge funds buying them. So if you have a third-party software like Tradiex or another option flow service, you can actually see what the options the hedge funds are buying. And that way it kind of gives you a little bit of a cheat code for the market. So if you find something that looks like it wants to break out, and then you also see that, hey, hedge funds are buying a lot of these calls, well, at that point, just copy the hedge funds, and 8 out of 10 times, 4 out of 5 times, you're going to be correct. So if those two things time up, it can be very, very good. And most of the time, once you guys get a little bit more used to it, you're only going to be buying when those two things work out. It makes your life a lot easier. The risk is a lot lower, and it opens yourself up to much less loss in the marketplace, especially when the market is very volatile or when market conditions are not the best because of COVID or something else.